Welcome back to Smart Stock Sam. On this channel, we do not guess. We map the math, track the money, and let the data do the talking. And right now, the data is screaming that everything we predicted for DataVault AI, ticker symbol DVLT, played out with almost surgical precision over the last 5 trading sessions. If you have been asking yourself whether this sub-dollar AI stock is still worth buying, whether the institutional giants are still quietly accumulating while retail investors spiral into panic selling, and whether the short sellers, sitting on nearly 26% of the float, are about to get absolutely steamrolled by a compliance-driven catalyst, then stay locked in because this is the most detailed and important DVLT breakdown you will be watching this week. By the end of this video, you will have a complete technical roadmap for next week's price targets, the exact entry zones to watch, a full picture of who is buying, and the 2 imminent catalysts that could send this stock vertical before most people even realize what is happening. Let's get into it. Let's rewind to February 28th. On that date, right here on Smart Stock Sam, we laid out a very specific roadmap for this stock. We called for a maximum pain bottom and identified a massive valuation gap that was being buried under layers of external noise and retail fear. The thesis was precise. DVLT was a compressed spring, coiled, loaded, and waiting for one catalyst to unlock its true value. Most investors staring at that chart saw a falling knife. We saw a speculative strong buy forming at the exact levels where the smart money was patiently building its position. That call required conviction. It required tuning out the headlines and trusting the technical structure we had mapped. And if you were watching this channel and you stayed disciplined, the market just handed you one of the cleanest, most well-defined setups of the entire year so far. Here is exactly what happened. In that analysis, we told you plainly, if the 74-cent level broke, we would see a straight line move directly down to 67 cents. That was the entry zone. That was the floor where buyers were positioned to defend. On Monday, March 2nd, DVLT hit an intraday low of 64 cents. On Tuesday, it printed 65 cents. Those 2 consecutive sessions were the exact entry zone we had mapped out in advance. Not a coincidence, not fortune, not a lucky call. Pure technical structure playing out exactly as the framework predicted, and what followed was nothing short of violent to the upside. From those lows, DVLT surged aggressively through the trading week, printing 79 cents by Thursday. That is a 23% gain in just 72 hours for anyone who stayed disciplined, ignored the noise, and trusted the levels. This is precisely why we build roadmaps before the move happens, not after everyone else has already figured it out. But as the stock approached the 80-cent ceiling, it hit a wall that we had also clearly flagged in advance. We identified 80 cents as the definitive line in the sand for DVLT. This is not just a round number sitting on a chart. It is a psychological ceiling and a heavy technical resistance zone where sellers have been positioned and waiting for weeks. On Thursday, the stock peaked at exactly 79 cents before sellers stepped back in and took control of the tape. Here is what you need to understand about that specific level. Reclaiming 80 cents is the holy grail for the bulls right now. The moment DVLT flips 80 cents from resistance into active support, the entire technical paradigm for this stock shifts dramatically. We are no longer talking about a bearish recovery grinding cautiously higher. We are talking about a full-blown breakout with real room to run. That single level flip changes the entire conversation around this stock. Now, you might reasonably ask, if the technicals were this clean and the institutional buyers were actively loading up, why did the stock close the week back at 69 cents? And this is where the story gets genuinely fascinating, because the answer has almost nothing to do with DVLT itself. What we witnessed on Friday was a massive risk-off shock rippling across the entire global market simultaneously. The launch of Operation Epic Fury and rapidly escalating geopolitical tensions sent Brent crude exploding 30% higher, breaching $90 per barrel in a single trading session. This warflation fear crushed speculative growth names across every sector globally. Retail investors sold the news in a full panic, dumping anything with a speculative label without a second thought. But here's the critical question I want you to sit with for a moment. Do you honestly think BlackRock, Vanguard, and State Street were sitting at their trading desks hitting the sell button alongside everyone else? Because the institutional ownership data tells a completely different story. Look at these numbers carefully, because this is the insight that most retail investors are completely blind to. While the stock was showing price weakness between late 2025 and February 2026, BlackRock increased its position in DVLT by 3,000%. Vanguard, up 2,900%. State Street, up 2,800%. We are not talking about small speculative accounts chasing short-term momentum here. These are the heavies of Wall Street, the three largest asset managers on the entire planet, quietly and methodically building positions of 4 to 11 million shares each at sub-dollar prices, while everyone else is looking the other way. They see the dislocation. They see the gap between where this stock is trading and where its actual fundamental value sits, and they are filling their books aggressively while retail remains distracted. Ask yourself honestly, when was the last time you saw three of the biggest names in global finance simultaneously increase exposure to the same sub-dollar stock by thousands of %? That level of coordinated accumulation does not happen by accident, and it does not happen without serious analytical conviction behind it. These institutions have entire floors of quantitative analysts, risk managers, and sector specialists running every model imaginable on this company. And their conclusion is the same. They are buyers at these prices. The divergence visible in the ownership data makes this picture even more striking. Over the last 90 days, DVLT's stock price declined by 64%. During that same window, institutional ownership increased by over 45%. There are now 85 institutional owners backing this company. Consider what that split is genuinely telling you. The price is falling hard while the smartest, most analytically sophisticated, most well-resourced participants in global markets are simultaneously increasing their exposure at every dip. This is the textbook definition of accumulation through retail panic. The big money is using macro volatility as a timed buying window to build massive positions in what they clearly view as a severely undervalued asset. So, if the world's largest asset managers are buying with both hands, what is the street's actual price target? Wall Street analysts are not looking for a few cents of recovery here. They are modeling multi-bagger returns. The consensus mean price target currently sits at $4.08, representing a staggering 475% upside from today's price. Maxim Group recently updated their target to $4 even, carrying a formal buy rating. Simply, Wall Street's fair value model places intrinsic value at $4.20. Now, do these targets sound aggressive? Of course they do, but here is what actually grounds the math. DVLT is trading at a market capitalization of roughly $400 million, while management is maintaining revenue guidance of $200 million for 2026. That produces a forward price-to-sales ratio of just 2 times. Standard AI sector peers are currently trading between 8 times and 15 times revenue. If DVLT received even the most conservative peer-level valuation, just 8 times sales, the stock price would be triple or quadruple where it sits today. That is not speculation. That is basic comparative valuation, and it is the same arithmetic the institutions are running when they build these positions. But price targets and valuation multiples mean nothing if the company lacks a real ecosystem to generate actual revenue. So what is DVLT actually building? They have a high-profile joint venture with the Mandela family targeting global financial inclusion across emerging markets. They have partnered with Sports Illustrated to leverage and monetize one of the most iconic media brands in history. They have established unique data pipelines with the NFL Alumni Association. This is not an AI buzzword company with a polished pitch deck and no product. This is tangible data monetization infrastructure being built alongside recognized, high-value brand partners with genuine global reach. That ecosystem is the foundation beneath every price target on the street. Now, here are the two imminent forcing functions that could accelerate this move far sooner than the market is pricing in. First, DVLT is in active negotiations to tokenize trillions of dollars in real-world assets, gold, diamonds, carbon credits, through its blockchain infrastructure. The addressable market there is enormous and still in its early innings. But the second catalyst is even more time-sensitive for near-term price action. DVLT is mandated by NASDAQ to reclaim a $1 minimum bid price by August 24, 2026. That deadline creates a hard structural floor beneath the thesis. Management is powerfully incentivized to release positive catalysts and push this stock above $1 well before that date, because the alternative is a delisting event that no credible leadership team allows without exhausting every available option first. And layered directly on top of all of this is a short squeeze setup that is becoming genuinely dangerous for the bears. Short interest is sitting at nearly 26% of the float. That is over 84 million shares that must be bought back at some point in the future. The off-exchange short volume ratio peaked at 57.5% last week, which suggests an aggressive and highly coordinated effort to suppress the price below key technical levels. With just 2.71 days to cover, any meaningful surge in buying volume could ignite a rapid, disorderly squeeze to the upside, and holding those short positions is becoming increasingly painful by the day. Annualized borrow fees peaked at 61.96% on March 5th. That kind of carrying cost is not sustainable indefinitely. The spring is coiled tight, and the shorts are the ones holding it down. Think about the pressure building from every single direction at once: the NASDAQ compliance deadline forcing management to act, the institutional giants accumulating from below, borrow fees destroying the carrying economics of the short trade, and any positive news from the Mandela joint venture or a media partnership announcement sitting right there as the potential trigger. Any one of those catalysts landing at the right moment could produce the kind of vertical price movement that traps every short in the book simultaneously. Before we wrap up, an important reminder like always: everything discussed in this video is strictly for educational and informational purposes only. This is not financial advice of any kind. DVLT is a highly speculative sub-dollar asset that carries significant downside risk. Always conduct your own due diligence, assess your personal risk tolerance carefully, and never allocate capital you cannot afford to lose entirely. Past technical setups do not guarantee future results, and macro conditions can shift rapidly. For the week of March 9th through March 13th, here is the precise game plan. The primary entry zone is between 67 cents and 70 cents, the proven floor where buyers have consistently defended. Major structural support sits at 67 cents, with the panic low at 64 cents, serving as the absolute worst case. On the upside, reclaiming 79 cents clears the 50-day moving average. If that level breaks with meaningful volume behind it, the near-term relief target is 88 cents, with the ultimate psychological and compliance goal sitting at the $1 mark. Trade the levels, trust the structure. Do not chase extended moves. Here is my final verdict on DataVault AI. This stock presents a rare and compelling convergence of technical validation, deep institutional accumulation, a hard NASDAQ compliance deadline, and one of the most loaded short squeeze setups we have tracked all year on this channel. The risk-reward ratio is heavily skewed to the upside if, and only if, you manage your entry strictly within that proven support zone. The data is aligned, the institutions are positioned, and the shorts are bleeding, carrying costs. Now here is the question I genuinely want your answer to in the comments right now. Do you believe DVLT reclaims that $1 compliance level before the August deadline, or does the macro environment push that recovery timeline further out than expected? Drop your price target and your full reasoning below. I read every single one. If this analysis added real value to your research process today, hit that like button right now and do contribute towards making this video rank in Hype Leaderboard. It makes a bigger difference to this channel than you realize. And if you are not yet subscribed to Smart Stock Sam, tap that subscribe button because this is where data-driven analysis lives. I will see you in the next one.